The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Daryl Martin, and Steve Rhodes.
Welcome, folks. Tom O'Brien, Daryl Martin, Steve Rhodes. We appreciate you growling and prowling out here with us. Right now, you get the Dow Industrials up 14, Nasdaq's down 1, S&P's are flat. We get gold up 580. Bonds are down 27 ticks, and King Dollar is going to the moon, folks. King Dollar's up 662 ticks at 82.78. Jobs numbers come out. What you have with the jobs numbers is 237,000, so the economy's going. And Euro's down 123. The yen is up $1.20, which is just amazing. Steve Rhodes, what's going on, brother?
Going to the moon? What's beyond the moon?
Hey, well, the next step for the moon, we're at 82.79, and that little baby, folks, is going to 84.25, and that's going to be nonstop. What you have here is that, let's go look at this. This took out the B point of a much larger ABC up, and let me see what kind of volume we got right now. So
there was pretty big volume in it early on during the jobs report.
Yeah, we get 17,000, and we're going to need... Yeah, we're going to do it. We get 17,900 right now, folks. You need 34,000. So it's going to be interesting.
And the reason that I say, maybe beyond the moon, because to me the moon would be a 100% move of a move, going all the way back in the 84 level, July 24th. And, what I've got up on my screen here right now on the U.S. dollar index is a great Gartley sell pattern. That Gartley sell pattern, really, the number is right around the $83 and change, 83, 83.10, and so far the intraday high out here is 82.94, so pretty much there. And what it is, Tom, it's got a 1.618 expansion off of that November 16th high, which was 81.51 all the way down to the low on February 1st. And you've got that's the B2C expansion. And then you got the 0.786 retracement right now, which, in essence, it's really hitting today off of that July 24th. And, my experience is that when those fail, not only do they do that 100% move of a move, but they go beyond the move, beyond the moon. They go ahead and make that butterfly pattern out there. And that would really put some energy into the U.S. dollar index. That would take it up to at least 85.78 out there.
Yeah, which makes sense, because what you had here, folks, is this. Is that the last retracement that we did on the dollar was the least amount of retracement that we've had in 5 years. So bottom line is that was showing the strength in it. And folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You're going to see the Nadex platform on the top, on the side. You can bring that platform up. Daryl's going to be coming up at the break. He's having some computer problems. He probably just had too many trades on at that open, because what we did have with that jobs numbers, and it's so wild, folks. There's no doubt. The good news, and this is where it's always deviant in the marketplace. Could not move the market. We've got a million other, questions about, the dollar strength. Doesn't matter with that, meaning that the dollar was going up and the market's going up. Well, you'll see how this shakes out, folks. This dollar is going to shake, rattle, and roll some deals here. So gold. Talk to me about gold.
Oh, baby.
Oh,
well,
baby.
I'll tell you what.
Oh, baby.
Gotta love the that's what the Nadex platform, is really so great.
Yes.
About, it's just simply the ability to take either side of the trade, just looking for the proper reward to risk. So here's my take on gold. And I'll go ahead and put it up on the
spread this morning, by the way, folks, is already $20, which is amazing. So hit a low of 15.60. We're at 15.81. And if you do on Monday, folks, at 7:30, I'm going to be on CNBC analyzing gold. So check it out.
Yeah. Okay. All right. So I'll give you my take on it. My take is, so one of the things that I do over the weekends, sometimes it just depends if I'm around late Friday afternoon, but at 3:30, the CFTC releases the Commitment of Traders data.
Right.
And so when I take and the Commitment of Traders data, you can take a look at what they really separated into 3 groups. And then the 2 groups that I really pay attention to are either the small individual traders or the large commercials out there. Now, inside the large commercials, you've got the producers as well. So when you take a look at gold, and I've got it up on my screen here, at the bottom, now, in order for me to be able to analyze this, it's easier for me to go ahead and import this data into my system. And so that's what I do. I tell you, I've got a spreadsheet. I know Z in the Den, he follows a lot of this data as well.
Yes.
I go ahead and import it into my my spreadsheet and just see where we're at. Right now, as of last week and the week before, and it's always through Tuesday's data. So the release of information that comes out today is going to be as of the close on Tuesday. So you have a little bit of a lag there. But as of last week and the week before, the large commercials had taken their smallest net short position. There's a red line going across my screen on the very bottom. And that is the same area. That way, they were that net short, which is the smallest net short position, going back to the lows in 2008. The last time that it was down there happened to be right as a low was being made on January 28, 2011 out there. So we're back at those same numbers. So the large commercial traders, what they're doing is, now, is it the producers who are worried that gold's going to keep moving down and they're selling forward their inventory? That could be a part of it as well. Unfortunately, all I can do is go on summarized data. But what I do know in taking a look at gold, and knowing that we're also near the bottom of a support area, that
Yes.
September 30th support area. So when I put it all together, and I take, that was how I use the commercial, the COT data to actually take a short position in oil. My clients and subscribers know that I alerted them to what we were taking a look at on the COT data. There's some other correlations there, and we were just waiting for a candle signal to go ahead and take a short trade on it. So the data, using this data, which is one of those other silent signals that's in the marketplace, is the reason that that I am bullish gold here. Now, for me, what I liked is how I saw the commodities actually act this morning. And it's so counterintuitive because I'm on board with you, most certainly with regard to the strength inside the U.S. dollar, the weakness inside the euro out here. And in order to be this bull in gold, it means I've got to just simply disregard the dollar-gold relationship. But the reality is the dollar-gold relationship has kind of come unglued. I think you even talked about it, over the past couple of days with a caller or something like that. But it's all based on this chart here that we're taking a look at, and doesn't mean that it's right. It just means that for me, there's enough information.
It's a good place to take a position anyway.
That's right.
Because what you have here, folks, is that you always want to take positions at swing points, and
yes.
the money management is what it's all about. And so
Exactly.
absolutely, I agree. It's an absolutely great place to take a position. There's no doubt.
Yeah.
We've had, you get down to the 1560. The last low out here was 1554. We'll see where it shakes out.
And my preference would be to test the darn swing point, but you can't always get to everything.
Yeah, it's
maybe you can.
Well, you
but,
can. No, you can. There's no doubt you can. What you're going to have out here, as we've been talking, folks. Okay, the bottom line is that you get the sell-off happening in the marketplace, and this is where I said even at the beginning, the deviance is going to be absolutely incredible. If we go over to the bond market for a second, you take a look at bonds, folks. This is a classic, and what you're going to see, bonds basically spike the bottom, and it's going to reject that bottom. We got down to 140.14. We're at 141.10 right now. That is a heck of a move.
Yes.
So there's going to be a lot of different correlations that take place, and of course, what you have there is you have the aspect that good news is bad news for the marketplace. If you go take a look, what you're going to have this week, we've talked about the SPY, how the SPY has been hitting the highs of 2007. You've hit those highs, folks, with about 35% lighter volume. That's the first part. Now, what you have to take into consideration, those highs of 2007 never had the volume. That's the amazing part about it, folks, okay? So the high point there was 156, the first high. The second high was 157.52. We've hit the 155.60. Then it would dramatically lighter volume. Now, this is a kicker, too, Steve and folks. last month was the highest margin debt since July of 2007. You were 20 billion off. It's 352 billion versus 372 billion. And that's what the amazing part. It's over and over and over again. What blows my mind, folks, is that how does this happen? How does the market, okay, when we're not talking 10, 20 years, folks. We're talking 100 years. And over and over again, what ends up happening, people say they're not going to leverage up. They leverage up at the highs. Okay, I know. It's amazing, man. The correlation is so direct, folks. It's insane. I mean, it's absolutely insane. Now, check this out. The last month, in February, in January. Let's see, what month we're in? No, in February. Okay, in February, because this was, in February, they leveraged up 10% more. It went exponential.
Wow.
Isn't that crazy?
Both those points are really key points that you made. I hope that our listeners really caught those because, as you were saying, we're benchmarking what the S&P, what the SPYs are doing, volume back against the October 2007 area. But the point that you made there was the mere fact that level of volume was light volume.
Right.
Yeah.
And,
so that's.
And we stayed there. You know what I'm psyched about? I'm going to try. I was thinking about this morning because they're talking quite a bit on CNBC about the volume. I'm going to try to get my volume characteristic in there. As soon as I get off, they just called me. I'm going to send them over a couple notes because what you have, folks, is this. And I want to see if I can get the correlation over that. You're walking in the store and there's less people in the store. Why would you pay up for the product? I mean, to me, if I wasn't even a technical person, it's a common sense type of deal. Okay?
Yeah.
Why would you pay up for a product when there's no one in the store? It's like if we were face to face, no one in their right mind would pay up for a product. It's just, but you know what? We get a lot more, basically, thinking about how the human mind works, man, because people pay up, they work hard, and then they pay too much money. And then they won't buy things when they're cheap. Oh man!
Well, look, that's the mindset you absolutely have to be successful in this marketplace.
I'll tell you, man, it's amazing. Let's go take a look at some of the high volume stocks that we have out here in a low volume market right off the bat. And we have your Bank of America down 22. Pandora's up a couple bucks. They come out. They lost less money than they thought they were going to lose. Let's see. You get Ford.
Yeah, they had a really nice bounce, and they've got good volume in it, but it's going against the area where it last broke down. Now it looks like it's going to have more volume than that today, but price right now just isn't holding. It had a big gap down on March the 7th with 22.3 million shares. So far today has already done 12 million shares, so it's got the volume there. But right now, price isn't holding.
Yeah, no doubt, and I can tell you, I'm glad I saw this, folks. Someone had mentioned the Tiger's Den. Actually, I was listening to a Ken show, and I'm glad I was just swapping computers. And thank God I was just swapping computers because I was just ready to put a bearish option trade on Pandora when I was going. Well, I was going from my office to the studio, and I couldn't pull it up quick enough. And thank God because it looked like an ABC down to me. You stay right there, folks. Steve Rhodes, Darryl Martin, Tom O'Brien. We're going to be right back. We have the Dow 20, NASDAQ down 2, S&P's are flat. We're going to be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Daryl Martin, Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling with us out here. Folks, if you do happen to be in the San Francisco area, Silicon Valley area, Daryl and I are going to be out there next Saturday morning, 8:30 to 12:30. Want a great education, 4 hours. Nadex is sponsoring it. It's absolutely free. As Steve had said a little bit earlier, there's $2,500 in prizes. We're giving out, Nadex is giving out quite a bit. You can go to the website at TFNN. And you'll see it right on the front page. And, I absolutely look forward to coming out to San Francisco. You know it's sweet this time, Steve. When we went into Denver, we basically were in and out. But I can't get back on Saturday anyway. So I get to spend Saturday night there, which I'm psyched at.
Oh, you lucky devil, you.
Yeah, I think I'm going to be moving, getting a little car and getting up to, having someone get me up to wine country there. Cause it's,
even better. Well, if you can't make it all the way up there, go down to Sausalito. And stop in at one of my favorite sushi bars. Now, you'll need to stay at a hotel like right next door because you won't be able to walk out of there. It's not the sushi that gets you; it's that sake.
It's so funny. I actually have a rock, folks. I have my own rock in Sausalito, and this is a crazy story. When I was in the Marines, I used to go to Sausalito a lot because I was stationed at El Toro, so I'd go down to Sausalito, and that's a hike, folks. But you get
down
there.
That's a good drive. That's a good drive. Yeah.
And there's this large, so if you know Sausalito has a very small beach, okay? And when you look out right next to the wall on the left-hand side, if you're looking out on the bay, there's this huge rock. And I used to sit in this rock all the time. So check this out. So that's in 1968, folks, okay? So the first time I got back there was probably about 20 years later. But what's really wild is that the beach actually got a lot smaller, so the rock was closer to the water, right? Okay. And listen to this is crazy. So when I'm coming off the rock, I ended up spraining my ankle, man. I ended up right on the ground, and I had a business deal I had to do, right?
Yes.
So my ankle is exploding, right?
Oh.
I'm saying to myself, man, I can't believe this. So I went and did the deal. Then I had to get back on the plane. Now check this out. This is really wild, folks. This is the first time I realized that a Tylenol was so powerful. And so I'm getting on the plane, and I can hardly walk, and, you know, one of the flight attendants come up and says, you know, have you taken anything? I says, no, take a Tylenol. I said, what's a Tylenol going to do? Do you know what I mean?
Yeah, yeah.
It blew my mind. It blew my mind that a regular aspirin could actually take pain away. And that was a heads up. I was like, you got to be kidding me. But anyway, I made it back. But I love
we got to get a picture of that rock, because you've got one. I've got one.
Yeah, you got one too. Your rock's bigger than my rock. I know what his looks like. Yeah, that's it. No, you know what? We will get a picture of it, man. Yeah. I'm going to take a picture and bring it home with us.
That's cool. That's cool.
No
That's cool. Well, so you know, you're on the West Coast. Speaking of the West Coast, I see Google today is right now pulling back into the most recent gap up from a few days ago, and it's doing it with pretty decent volume so far. A little over 1 million shares, coming into where it broke out with 2.7, but it really only broke out with 4 million shares. We're only just slightly under an hour into the trading session here, so. We'll see what that does.
Yeah,
but that should put a little bit of pressure on the NDX out there. And I saw Apple earlier this morning tag that 435 level again. I haven't checked in on it here in the last few minutes, but
yeah, that first spike in Google's a big one. You know, it's going to be amazing, folks. What is actually moving the NDX the most in the last 2 days has been Rangel Resources, and that's it. See, the NDX is a modified weighting structure. And Rangel's a big weighting in it, which is really wild. So, what you had, Rangel first was down $2, up $2. We'll see where it shakes out. But right now, bottom line, inside the NDX, it's not affecting it, but it will affect it either both ways, for quite a while now. Because what you have is that it's at that price point in the modification inside the NDX that keeps it a heavy weighting, so it's going to be wild watching how this whole thing does shake out, man.
Yeah. Now how can, with those modified structures,
yes,
how do people, other than, how do folks find out what that weighting is, where that, because you're saying it's different than the percentage of the actual,
And what happens is this, okay? You can basically, you can go to the NASDAQ, NASDAQ and get the weightings. And then you have to really get used to them, folks, because what ends up happening is that you'll have the percentages, but as the price moves, the percentage moves, okay? But what you will get used to, these are the ones you always have to watch out for, meaning the ones that could whack you in the back of the head, would be Gilead Sciences, Biogen, Rangel Resources, There's a couple more that you don't hear about a lot, but baby, if they move, you get, either way, they'll affect it a lot. You stay right there, folks. Steve, Darrell, we're coming right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Roach, Tom O'Brien. Appreciate you growling and prowling with us. Daryl's having a tough time. He's got a couple new computers, and he's having a tough time getting on right now. But he will be joining you, no doubt, at his own show from 1 to 2 Eastern Standard Time. And don't forget, folks, if you happen to be in the Boston area, I know you're getting some snow up there, but you can join our man, Mr. Basil Chapman, tomorrow. He's going to be at Babson College doing a Master Trader Series. Hey, you know, Steve, we're so lucky down here, folks, not getting snow, aren't we?
Oh, yeah, yeah. You know, I love skiing.
Yeah.
Love going out and, you know, but having grown up in the Detroit area where it was mostly cold, well, you know, we didn't get a ton of snow.
Okay.
We got snow, but then it automatically turned to that nasty gray slush. And so you never really had much of an appreciation for, you know, all of our listeners. You got folks that live in Colorado. Snow's a whole lot different. You know, winter's a whole lot different.
That's white gold for Colorado, man.
Yeah, exactly. You know, whereas, you know, you're in a big city like Detroit or what have you. It's just, you know, you're just dealing with cars all over the place. Nothing that ends up really beautiful other than just the day that it snows out there. So, yeah, I agree. Although, you know, we've had that little cold front come through. That's not been a lot of fun.
Yeah, folks.
I don't like when it gets below 70.
It got down to 55, 50 degrees, folks. I know, man. Let me tell you something. I was sitting around, you know, crying like a little baby the last few days. I'm saying to myself, I better stop it because we know it's going to get very humid pretty soon, folks. And so you got to grab it all. But today is absolutely insane. There's no doubt. You know, when we look at the market, you know, the deviance, folks, in the market is absolutely what you want to. This is what ends up happening with the market, folks. You can get more out of the market in a move that is opposite of what you think should take place than you can get with a move that would make sense. And the reason, and the reason for that has to do with most folks just don't understand how markets move. That's what it really comes down to. You know, the amazing part, you know, what's wild, Steve, is that each and every between the last let's say 2 weeks on CNBC, that's all they're talking about is you're at high with no volumes, okay?
Oh, yeah.
And then on Bloomberg, what ends up happening, folks, is that I was talking about this in the show yesterday. They had just finished an article saying that the correlation between the U.S. dollar and the market has changed. Not that it wasn't working. It has absolutely changed, okay? I says, oh, thank you, God. I says, this is exactly what I need. Now, isn't that crazy? But it absolutely is, man. Do you know what I mean? You got to love
it. Yeah, absolutely.
Let's go to Charlie in Framingham. Hey, Charlie, what's going on, brother?
Good day to you. It's just lovely up here. It's pure white.
Is it? Oh, that's good. Yeah, that's got to be beautiful, I bet.
Yeah, it's pretty, but it's not fun to drive in. But you know,
well,
you guys do have your issues down there with hurricanes. So you know, this is a small price to pay in comparison.
Well, you know, it's interesting what you say. That the last time that what happens, folks, is it depends where you are actually in Florida too. But, 7 years ago, we had 5 of them come in a row, but none of them hit us. But, on the West Coast anyway. But no, there's no doubt. If we ever get hit, it's trouble in paradise. We're going to look at AVEO. So it's a biopharma company focused in discovering, developing, commercializing cancer therapeutics. The low's 580, the high's 14. As most biotech companies go, they lose money. In this case, 250. Okay, so what do we got? I wouldn't bite yet, Charlie. So
I'm in.
You're in. Well, you got to stop under today. You got to stop under today's low.
Okay.
What you have here is this. Okay, so let's bring this back. You haven't had a sign of strength yet, man. There's all signs of weakness. Every single bounce. If we go back 3 months, stocks at $21. You're down at 686. And you can see when we're looking, folks, January 18th. Well, first off, on the 11th, on the 13th, on the 13th to the 15th. So the 13th, it makes a high at $8.94. It does that with 1.6 million. Then it comes off that high with 7 million. You see that?
Yeah.
Goes down to 749. Then comes off that level with another 6 million. Gets down to 630, 650. What you need is that you need a sign of strength first. Then you buy a retracement. Let me just see something else.
Right.
Yeah, I'd be really careful here, man. Really careful. Let me just... So you have... Okay, May 3rd is the next time they're going to come out with numbers. And then what you want to do with this, Charlie, you got to make sure that this company has enough money. That's interesting. Okay, so right now they're taking in, looks like they're going to be taking in about $11 million per quarter. I would just make sure that they have enough money to stay in business, man.
Right.
Because what you have when you look at this, you've had a high of 22, you're at the lows. This thing's going to go test the 641 again. And if you have volume, it'll get a 601. And if it goes to 601, then it's real trouble, man. So what do they do, Charlie? Why are you so interested in this one?
It's cancer. No, it's okay. I'm making $112. I'll go ahead and just sell it.
There you go. Cooking, brother.
Yeah. They're involved in cancer therapy type stuff. It's risky.
That's all right. You got the premise. Hey, great talking to you, Charlie.
Same here. Take care. Thanks.
Thanks. Let's go to Mike in Lakewood, California. Hey, Mike, what's going on?
Oh, pretty good. It's was raining. It started to get sunny again. So
perfect, man. Perfect.
Yeah, you made a comment, I think it was about 2 days ago, where you talked about margin being near where it was in 2007.
That's correct.
Can you distinguish between margin that's margin long, in other words, you're buying stock on margin, as opposed to being margin where you've gone short? Because obviously you have to have a margin account to be short.
Yeah, I can. We're talking about the NYSE margin long, the numbers I came out with.
Oh, those were, okay. I didn't
They're
hear
margin
that.
long. And in fact, now this, I'm glad you brought this up because what has also happened is that this has also been the lowest short position this whole year. So you get both of them happening. Yeah. The numbers that I gave out, the 352 billion, folks, have to do with the NYSE only. But the NYSE, of course, is 5,000 stocks. So, yeah, those are long positions, man.
Okay, that's great. I got one other quick question. When you look at the short positions, how often does the short percentage get updated? Is that something you can look at on a daily basis, or is it only updated every so often? I'm just curious.
On my screen, it's a daily basis.
It is a daily. Okay,
Yes.
Well, thanks very much. I appreciate it.
Okay, man. Have a great one. Have a safe
You too.
one.
Bye.
And the short position, folks, is really important to understand because what happens is that as equities are going up, going the wrong way in a short position, if, you know, the way I look at it right now, I used to use 10%, now I'm down to 8%. I don't like shorting anything that's over 8%. Because what tends to happen, well, what does happen, is that would mean that many shares have to be bought back, period. Okay? So all you have to do is get the stock going. And you can see, you know, what's really, you know, Steve, what's really cool here is that what has happened, folks, is this, is that you have Carl Icahn coming out of the woodwork again. And
boy, he sure is.
Oh, yeah. And, you know, he's a trip in himself, man. You know what I mean? He absolutely is. I could tell you some great stories about him. And the stories are, folks, okay, he's a huge stock operator, and he is operating on the public right now in a huge way, you know. And as they, you know, whether it's Netflix, whether it's Herbalife, whether it's Transocean, they are using their positions in order to have the public follow them into or out of equities. And let me tell you something, folks. If you're paying attention and doing something that they're doing, you're out of your mind, okay? Because picture something. When I want everyone to picture something. Whenever you're making real money, are you going to go out and tell people? No. It's not even close. It's not going to happen, okay? And the last time I saw him this active was really about 20 years ago, you know? I mean, you know, he started little by little, and then, you know, of course, right now he's out here in a big way. And I suspect he's out here in a big way because he knows that Warren Buffett's out there in a big way. What we do have in the market at this particular point is huge amount of bullishness. In fact, hey, Steve, did you hear, if any of you folks, did you hear Jeremy Siegel yesterday on CNBC?
Just a tad, just a tad.
Folks, this is as good as you get. Jeremy Siegel, you know, he's always been a Super Bull. It was the Super Bowl the last time the Dow was at 14,000 because I was 6,600. I felt like saying, you're out of here. Yeah. Well, anyway, but this is the quote that I love the best. That he thought that there would, now you got to picture something. This is a professor at the Wharton School of Business, and the Wharton School of Business is probably one of the best business schools in the world. And he was saying that there's not going to be a pullback. Like, there's not going to be a pullback. Oh, really? Like, you can be the best bull in the world, folks. That's not how the market runs. And when I heard that, I says, oh, really? There's not going to be a pullback. You know, and I'm not even saying to be a bear. It's like, okay, so the market's going to go up forever. I see how this works. Market's going to go up forever. It's like, how does this work? How can you, you know, it just blows my mind. You know, it really does. You know, but you know what that says to me? That Jeremy Siegel doesn't have a dime in the marketplace either, folks. Okay? That's what it really says to me. It's a wild one, man.
You know, we had you know, Charlie from Framingham was calling. He was talking about that biotech stock. Can you, Sarepta I think it's Sarepta Therapeutics, SRPT. Can you go into your system and see what kind of, what are the funds doing there?
Oh, yeah, this is a Bud Rolf's one, right?
It is.
Yeah, let's take a look, okay? So let's take a look at this baby. Okay, so what we're doing is that we're bringing up the buying and selling by the funds. Okay, so the last filing, last 13F filing, folks, has December 31st. And the largest buyer, who actually owns 4.3% right now, they piled in. Columbia Wagner, they bought 1.3 million. Lord Abbott bought 1.2 million. Gilda Gagnow bought 850,000. There's a huge amount of buys. That's the first part. Let me see where the sells are. Yeah, and the sells are dramatically lower. The sells, so if you're driving in your car, folks, the sells go like this. The sells from top to bottom go like 500,000, 500,000, and I'm giving you the biggest to the lowest. So it goes 523,000, 511,000, 232, then it goes out of 159, okay?
Wow.
That's the sells. The buys go like this. 1.3 million, 1.2 million, 1.1 million, 800,000, 700, 600, 600, 500. So there's no doubt that,
some accumulation going on.
There's accumulation going on for sure, for sure. And in fact, let me just bring this down. Well, I'll bring this up again. So, yeah, there's huge accumulation going on. Because, watch this. I'll just ballpark. I'll get close to it. 500, a million, 1.2, 1.5, 1.7. 2 million. So check this out. The top 9 sold 2 million. Okay, that's on one side of the equation. Now watch this. On the buy side of the equation, the top 9, 1, 2, 3, 4, 5, 6, 7, bought 9 million.
Yeah.
So there's whatever this company's doing. Let's see. So
well, this is the one they're into Duchenne's muscular dystrophy.
Okay.
And so they're into the still some trials.
Yeah.
And so forth. And they've had some. I spoke with Bud a few times here over the weekend and even early in the week out here. So we were just talking about this equity because, he's in it big time. His son is in it big time as well. And I had been waiting for this to maybe pull back to the breakout area.
Okay.
And as we were talking, I said, no, I want to see what kind of accumulation is going here because it keeps holding it. It's pulled back a bit. It's pulled down into the 22 area. But just simply won't give it up and move down. So we had with Mike asking about the short interest, and your system that you use is so great because you've got such great, accurate information that's easily accessible. Short interest, accumulation.
Right.
Now some of the accumulation stuff you can get out there, but not as accurate as what is inside that Bloomberg system.
Yeah, no doubt. And this one, it's interesting because we talk about volatility, folks, and the month of October, the stock traded from $14 to $48, back to $21. Man, oh man, that's it. You better do not be buying highs on this baby. That's for sure.
Yes, that's right. That's right.
But the bottom line is that it's amazing too, folks, is that our man, Mr. Bud Rolfs. I remember when Bud is a biotech extraordinaire because when we first hooked up, they were actually the way that we actually met is that he wasn't running a room over in Yahoo, but he might as well have been, and it was a biotech stock that they all made a fortune on. I forget the name of that stock, but it was a stock that eventually got taken over and had a big drug, so they really knew what was going on. Steve Rhodes, Tom O'Brien, you stay right there, folks. And folks, if you haven't test drove the Nadex platform, come over to our website at TFNN. You can test drive that platform with $25,000 of funny money into it. If you want to get a great education next Saturday morning, 8:30 to 12:30, San Mateo, California. The Darryl Mott and myself. You stay right there, folks. We're coming right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, the roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. And don't forget, folks, each and every trading day, 9 a.m. Eastern Time to 6 o'clock Eastern Time, we do live programming. You can get all of that programming live at tfnn.mobi. And hey, Steve, you know what's so cool, man? So if you saw this, folks, David White and myself, we were talking a couple weeks ago. They had the mobile show, the telecommunications show. But next year, folks, so check this out. In the 2014, this is all of GM models in 2014, your radio is going to be the internet, which totally makes sense. But what that also means, folks, is that you're going to be able to tune us in to TFNN. And check this out. The models, folks, the speed is going to be 10 times faster than anything's out there right now. Isn't that cool?
Not only that, I would imagine that, because those cars usually, well, some of them, they're outfitted with the screens, too, in the back seats.
They're not going to, that's right. No, they're having the screens, but the screens are going to be in the back seat. And the thing is, what's amazing, folks? It's like, why did it take so long? See, it's so simple to do. And it just totally makes sense. And now it's going to destroy it. Well, the radio business itself is, basically in trouble. But that's just going to be, it's not that radio is going to go away, meaning that,
yes.
It's not. But what it does is that there's more competition. That's what it comes down to. But it's really neat, for us at TFNN that it's going that way. Because when I look back at the just how we started, bottom line is that we were one of the first streamers on Broadcom.com. So
look, you've called it. You've been out in front of this wave for a long time, and especially when you take a look at what it is that you've done here with TFNN and the radio shows, and being able to pick it up on any mobile device, whether now by audio or video and audio.
Yes.
And it doesn't. I happen to one of my favorite movies, if I ever do sit down and watch it, is a movie called Almost Famous. I don't know if you've seen it.
I haven't.
And it's a story about a rock and roll band and rise into fame. The reason why I like the movie is because the music and it's just I actually just sit there just to listen to all the great rock and roll songs that come on.
Yeah.
But what this story goes back now, back into the early 70s or what have you, and at least the early 70s. And there's a scene in here. This kid becomes a story writer, and he's doing it with he's doing a story for the Rolling Stone magazine, and there's a scene in there where they talk about if you go to this place, a specific place, you can send it on something called a mojo, which is a reference to the fax machine.
Oh,
and
wow.
It does, and the scene in here says, and it does one page every 18 minutes. So, technology, and then, and of course the kid is typing up his story on an IBM Selectric, which used to be in everyone's house. Go find one of those in somebody's home.
What's so cool about this, folks, is that Steve remembers the Selectmatics, but you also, I'm sure, remember the fax. I remember the fax. When I was doing the bankrupt bonds, check this out, folks. This is January of 1980, okay? Well, what ends up happening is that the faxes, just as Steve said, would take that long, and we were getting paid out of London on some of these, out of Lloyd's of London.
Yes.
And I remember that the PO would come over, okay? And, I'd look at that, and we used to call it the money machine. I'd be looking at it, and you're waiting, and you're waiting, and you're waiting. And that's how it worked, but it was that long. And then they would send over the order, okay? And then I would turn around and, say, okay, I'd sign it, I'd send it back, and it would take that long. Amazing.
Yes.
Listen, folks, you stay right there. We get our man, Mr. Basil Chapman, coming up next. Growling a problem with you. Steve Rhodes, Tom O'Brien. Dow right now up 30. NASDAQ up 3. S&P's a flat. Have a great day, safe day. We look forward to, of course, staying with the rest of today and my show tonight. Steve, have a great one, man. Have a safe one.
You too. Take care.